And what a Valentine's Day for gold, with the metal posting sharp gains of around $20, chasing the $13.50 mark here. So can it keep the pace? Joining me today is Maxwell Gold. He's the Director of Investment Strategy and Research at ETF Securities. Maxwell, welcome back to the show.
Thanks for having me.
So gold bugs out there really excited by the price action we're seeing today, but can the metal keep the momentum here?
I think it can. So what has sparked the gold's price move today has obviously been the increase in inflation. I think that is boosting inflation expectations, and I think that's giving some consideration about what the Fed's going to do this year. And overall, I think that's been a benefit for more cyclical commodities, so beyond gold, but silver and other commodities as well. And we're beginning to see that boost up as we're seeing that inflation rise.
Well, I think that's where a lot of the frustration of investors lies, though, is that gold seems to react momentarily or daily to data and news coming out, but then it just kind of fizzles out the next day. So do you think this time it's different?
I do think that gold can respond positively because beyond the inflation factor, we're seeing the dollar remain weaker. It was down about 10% last year, 2% so far this year. I do think that we're structurally in a dollar bear market, and I think that could boost and support gold prices in this range. And if we do get more equity volatility, that could certainly push them above 1,400.
Do you think that silver's going to follow gold's pace here?
So I do think silver has some catching up to do. I think there's more upside potential for silver than, say, gold this year. I do think that gold will remain robust, but silver has industrial production, manufacturing rising. Additionally, it is relatively cheap compared to gold if you look at the gold-silver ratio, and we are seeing mine supply begin to reduce. So I think that will begin to weigh on the overall fundamentals for silver, boosting up the overall balance.
We've seen tremendous inflows into gold ETFs, but I've asked other ETF experts the same. The demand for physical bullion, at least in North America, is not there. So why do you think there's such popularity of ETFs right now?
So I do think that ETFs are the vehicle of choice for investors, particularly in North America. We have seen increase of physical bar and coin demand in Europe, in particular Germany, right, as well as in Southeast Asia and Russia and India. So I think that the demand overall is there, and it is steadily remaining. It is remaining robust. But I do think that the liquidity factor for ETFs has certainly caught the eye of Western investors here, particularly in the U.S.
Finally, Maxwell, I know you've written many commentaries about Bitcoin versus gold, and I don't want to bring up the B word again here, but you say they are different, but they both act as safe havens, which many people would say, well, how is Bitcoin a safe haven? But you do see it as one.
I actually don't see it necessarily as that same store of value that gold has served for hundreds and thousands of years. I do think that gold does have that track record of stability. It does keep up with not only price inflation, but currency devaluation. And additionally, we have seen a lot of mania bid up Bitcoin, and it's fallen about 60% in the past month. And from that perspective, I do think that is reflective of speculative buying and mania, less so than an investment perspective.
All right, Maxwell Gold, thank you so much for your thoughts.